is a show specifically meant for long-term retail investors. Over the next half hour, we'll tell you how to trade this market and how to make money in the long term. Now, with the Nifty reclaiming 6,000 on Friday, we'll find out what your investment strategy should be. We'll also discuss what you can expect from the earnings season. We'll also answer some of the questions you sent in during the week. Remember, if you have any questions regarding our stocks, send them to the email ID at the bottom of your screen. Now, before we go any further, my colleague Ajay is here to update us with what happened in the markets this week. So, Ajay, take us through what happened. Obviously, big reaction to Ben Bernanke's announcement.
Well, as far as the markets are concerned, it was a global synchronized up move which we actually witnessed this week, starting Wednesday or midweek, when Fed Chief Ben Bernanke did indicate that the QE tapering will not happen in a hurry. In fact, the accommodative policy stance would continue for the foreseeable future. So all the equity markets globally rose, and we also participated. So now the Nifty has shut sharp above the 6,000 mark. We're talking about around 2.5% gains for the Nifty this week, and same kind of gains in the Bank Nifty, probably because a lot of short positions were getting built in PSU banks. All of them were forced to cover, and dealers believe that this part of the market will be having more potential to go forward going in the next week as well. Broadly, looking at how the markets are shaping up, traders believe it will be the global cues which will be determining the direction of the market going forward.
Towards the end of the week, it was Infosys' earnings that really prepped up the market. Take us through those numbers and also tell us what to expect from the rest of the earnings season going ahead.
Well, Infosys' earnings definitely has been much better than what the street was estimating this time around, and we did see a good thumbs up coming in from the market as well. The stock surged to highest levels in 3 months. Biggest intraday move was witnessed in the stock ever since 11th of January this year. So there was definitely an element of confidence which was being exhibited by the market reading Infosys' number this time around. And more than the number, which was slightly above estimate, it was the guidance which had a lot of faith as far as the management is concerned. A lot of private sector banks will be declaring their results next week. So HDFC, Axis, Kotak Mahindra Bank. But again, expectations are that the net interest margins would remain on the stronger side. TCS was also declaring their numbers after Infosys' strong performance. Expectations are high, and probably they would fulfill the expectations because there has been a lot of fresh build-up for long positions ahead of the numbers. Bajaj Auto, of course, will remain a sore point. Analysts are estimating margins to remain under pressure. Exports as well as domestic sales already remain sluggish. And of course, Reliance Industries, where again there is an element of softness in the gross refining margins, which may be exhibited this quarter.
All right, Ajay, thank you for that information. Joining us today to help us understand what's going on in the market, and especially with that Infosys stock, is G. Chokkalingam, the Executive Director and CIO at Centrum Broking. Mr. Chokkalingam, it's always a pleasure to have you on the show to help us understand what's going on with our markets. Well, the Nifty is at 6,000. We saw the market react very positively to Ben Bernanke's statement. Now, I want to understand from you what you expect to see happen on Monday morning and how you expect this market to play out. Is it going to move further up, or is this a flash in the pan? Do you expect it to correct again on Monday morning?
I definitely don't expect market to correct significantly because today the trade deficit number has come, which gives a lot of comfort. Though the exports are not growing, you have seen about 70% fall in the trade deficit. And second, the Infosys also has come out with a better number. Of course, the Infosys may see some small profit booking on Monday, but I don't see any major crash or major correction in Infosys. And also considering the fact that the monsoon is going good, and already LIC also indicated that they would invest almost close to 40,000 crore in the current fiscal. So considering all these facts, I firmly believe that starting from next week itself, the market should remain firm. And the entire July and August, we should see the market improving further, and we should trend closer to almost 21,000 on Sensex before possibly August end or September end.
Well, we have just begun a new earnings season. I want to understand from you what you're expecting from this earnings season in terms of corporate numbers. Do you expect it to be a little more like how Infosys gave us a pleasant surprise on Friday, or do you think we're going to see some disappointments come in?
What I expect is that overall the corporate sector revenue to grow around 10%, the profit to grow about 4 to 5% year on year, But of course, within the sectors, among the different sectors and within the sectors, there would be a lot of negative performance from many companies. The overall, the 5% year-on-year profit growth should be led by basically pharma, FMCG, IT, and private sector banks. So these four sectors would continue to do well. Some of them even could surprise the market. But otherwise, remaining sectors like construction, real estate, shipping, auto, cements, they all would remain subdued.
So, Mr. Chockalingam, you're sounding very optimistic. Now, please tell us, as far as retail investors are concerned, what do you think our investment strategy should be when the Nifty is at 6,000? Is it too expensive for us to continue picking up stock and buying stock, or should we be picking up specific stock? How would you like us to approach this market?
I would give two suggestions. One, do not ignore the fundamentals, particularly the valuation. Every third year you see a theme playing out and then you lose money, which you have seen recently in real estate, oil drilling companies. So there are many themes which played out and are destroyed. So therefore, I would suggest one, don't ignore the valuation multiples, especially in FMCG and pharma. Though you need to stay invested in them because they would continue to provide good visibility of consistency in the bottom line growth. However, they should be selective in terms of the valuation multiple. So therefore, my suggestion to the retail investors is to look for value plays in the mid-cap, large mid-cap, even in the large cap stocks, and go stock specific in your approach and have a 1 year time frame because after a couple of months recovery in index, we would see a lot of volatility. The moment the elections are announced, there would be a lot of volatility. So therefore, you spread out your purchases and stay invested for the next 1 year.
Could you give us a couple of names that our viewers can focus on in terms of long-term bets that you still see value in right now?
Certainly, I would once again reiterate, even in FMCG stock like Tata Coffee. I think there is a lot of comfort in terms of governance, leveraging, and also in terms of business model. They talk of tying up with Starbucks for supplying coffee to entire Southeast Asia and also in India. And that is one stock I believe was a great value play, and it has corrected almost 35% in the recent peak. And you can also look at the stocks in the private banking space, stocks like Karur Vysya Bank and City Union Bank, and under state PSU category, one can look at Jammu Kashmir Bank. And also in capital goods, one should look at stock like Siemens. The stock has been beaten down a lot, and I firmly believe that there would be many more attempts by the MNCs to do asset purchase in this country since the rupee has depreciated by more than 30 to 33% in the last 2 years. And Siemens already has given once open offer and they try to increase the stake to 75%. Now, also they have merged 4 of their parent companies subsidiary with the listed company. So considering all that and also considering the fact that it is not leveraged, so one should look for that kind of company in the capital goods sector because I also firmly believe that the investment cycle will come back.
Well, a quick recap on the recommendations that Mr. Chockalingam just gave us. There was Tata Coffee, J&K Bank, Karur Vysya Bank, and he did mention Siemens. We have a question for you that's come in from Gaurav. He has 10 shares of Infosys which he bought at 2,300 rupees. He wants to know if he should hold on to that stock. Now, Infosys, after those very impressive numbers, better than expected numbers actually, ended the week at 2,804 rupees. Now, Mr. Chockalingam, for those of our viewers who are watching right now, who are all holding Infosys stock, should they be expecting more from that stock, or would you say now is the time to start taking some of that profit off the table?
In my view, the fair value for Infosys is around 29.60, based on the assumption that it would post an EPS of 185 for FY15, and I am giving a 16 multiple. And beyond that, I would not expect anything in the short term. So the investors can hold on till it reaches around 2,900 or 3,000, and then they can book profit.
Right, we have another question from Devarajan on the IT pack. He owns 28 shares of TCS, which he bought at 1196. He wants to know if he should hold on to that stock. I also want to understand from you, while we're talking about the IT sector, if you see value in that sector right now in any of those companies.
We can't grow IT exports, even by 15% in dollar terms. NASSCOM itself is expecting around 11 to 14% year-on-year growth. And hence, for a company like TCS also, it's going to be very difficult to grow beyond what industry is expecting to grow. And which means very difficult for TCS to justify any PE beyond 18 or 19. So right now it's quoting around 18 on FI, 15 EPS. I would suggest that they can wait for further recovery to say around the 1700, and then they can start thinking of selling. But however, what I said about the risk coming from possibly the exchange rate, in such scenario, as I said, IT stocks would be the best defensive. So till it recovers to 1700, hold on. Even if it recovers to 1700 in the next couple of weeks, just look at the rupee the way it is behaving. And if the investors are extremely conservative in the equity asset class, they should hold not only TCS, entire IT pack, all the IT companies.
All right. We also have a report card that we're going to pull up for you, Mr. Chockalingam. Before we let you go, you had recommended Biocon on this show in December 2011 when it was trading at 262 with a target of 345 in 12 months. That stock has missed the target. It's currently trading at 288. Now, if any of our viewers are still holding that stock based on your recommendation, what would you recommend they do with Biocon? Do you believe it still has long-term value?
I firmly believe that, it has got a long-term value. And in fact, it has underperformed within the pharma biotechnology space because of unexpected developments in the tie-up not going along with Pfizer. But however, I think, entire pharma space is very defensive. Within that, a biotechnology firm like Biocon would be very defensive one. And I am very confident that going forward, the stock can, the company can improve its earning prospects. They can definitely find more new alliances for their insulin products. And secondly, definitely there is a value unlocking potential from, their subsidiary. And therefore, I would suggest that the investor should hold on. In fact, they can even add if there is any correction the post results for the Q1.
We now have Sharmila Joshi, the head of equities of Peerless Securities, who joins us to help us with our stock investments. Sharmila, thank you so much for spending time on all of our stocks. Now, those of you who are regular viewers on this show, you know that Sharmila designed a portfolio for us on the 21st of December last year. That portfolio right now is at an overall loss of 14%. Compare that to the Nifty that's up about 2% during the same period. So, Sharmila, we have underperformed the market. I'm going to give our viewers a quick recap of the stocks you picked for us. The SAIL, BHEL, Central Bank, Godrej Industries, Island Access Transport, Ipca Labs, JSPL, Kajaria Ceramic, M&M, and SBI. Now, of the two, JSPL and SAIL are two steel picks, are doing very badly. They're down nearly 50% since we invested in them. Do you want to make some changes at this point?
I think the tragedy is that I don't have a problem with any of the names per se. I don't think that these are bad stocks, but I think that perhaps the timing was off because possibly the levels that we had in December were also fairly good, and perhaps the entry point in a lot of the stocks was higher. So what I want to do is really wait and watch for a bit, and maybe when we kind of discuss this portfolio again when Nifty is down, then I can try to rejig and either sell something that is making money and try and average out a SAIL or a JSPL, or maybe look to completely exit one of the two metal plays, so that because I think from the beginning the metals have been a big drag on my portfolio. But I think for the moment it's a bit of a wait and watch, because very honestly I'm not worried about the names per se. I don't have any doubt in my mind about the quality or the kind of prospects that these companies have going ahead. I mean, frankly, if you ask me, the kind of levels that SAIL or JSPL are trading at this point in time are quite ridiculous. So also State Bank, I mean, no doubt there have been issues, but I don't think that you should sell really State Bank at this level. So I think that's the bit of a quantity that I find myself in. So I think for the moment I'm going to wait and watch.
All right, so we're holding on to these stocks for the time being. This is Sharmila Joshi's portfolio. Remember, I did say it is down about 14% since we began investing in it. So Sharmila says let's wait and watch and see how the market pans out, because at this point with the Nifty at 6,000, might not be the best time to buy into any of the stocks. Well, I'm going to give you a recap of the stocks in this portfolio. The SAIL, BHEL, Central Bank, Godrej Industries, Iron Access Transport, Ipca Labs, JSPL, Kajaria Ceramic, M&M, and SBI. Well, Sharmila, we have a couple of questions for you like we always do. Mohit has written in. He has 100 shares of RIL, which he bought at 1,050 rupees. He wants to know if he should hold on to that stock. The stock ended the week around about 890. Now, there have been two stocks that have moved, quite steadily in opposite directions, since we heard about the gas price hike, one is ONGC and the other one is RIL. I'm going to bring in my colleague Ajay, who will give us an update of what's happening with both of those stocks, and then we'll go across to Sharmila and ask her what we should be doing with those stocks. First, Ajay.
Well, the oil sector has been in focus ever since the gas price hike has been announced. But if you look at the performances of these two bellwethers in the space, ONGC and Reliance, Reliance has been gradually moving upwards ever since the gas price hike has come, and ONGC has been drifting lower. A lot of analysts and traders on the street indicate that institutional positions are shifting out of ONGC and into Reliance Industries because of higher certainty or visibility of earnings financial year 14 onwards for Reliance Industries, and ever since the minister's remarks have come that probably upstream companies will have to bear a higher subsidy burden, the uncertainty on ONGC's earnings has only gone up for financial year 15 onwards, and probably this is the reason why there's a pair trade happening in the market, long Reliance Industries and short ONGC.
All right, Ajay, thank you for that information. Sharmila, I want to first talk to you about RIL. Like Mohit has written in, he wants to know if he should be holding on to RIL at this point. We've seen it move quite, smartly over the last couple of weeks. What's your call on RIL for a long-term investor?
For a long-term investor, it's fine, but I think that what's happening really with RIL is that it's been trading in a band, So now at 890 kind of levels, it's at the higher end of the band. So let's wait and see whether it can really conclusively cross 900 and head higher. Otherwise, I think it might be a good idea if you start seeing softness coming into the stock to just sell it and then buy it back later. Because, you're getting these 100 rupee kind of moves in Reliance almost 3 or 4 times in a year. So, that's the kind of investment we are seeing in Reliance. We're not really seeing people sitting on very long-term kind of calls, but, they're trading it and they're trying to catch it in that 100 rupee kind of range. And you do get that range about 3 or 4 times in a year. So that's the unfortunate part. But I think the recent development has been quite good for Reliance. I think both the fact that the kind of attention shale gas is beginning to get internationally, and let's not forget that Reliance is the only company that has been working on the shale gas front in the US, and the fact that now you're going to get a higher price for gas starting April 14, and we just had the clarification come. There was some doubt whether they would be asked to continue to provide gas at that old price of 4.2. So, that clarity has come in, which is why the stock has gone up. But as I said, because of that, I'm very unsure at this level whether it was just that trading pop or really we are going to see Reliance, cross 900 and move that band to, between say 850 to 950 going ahead. So I think that's the problem at this stage. So for a bit I'd stay put, but I think if you were to see markets beginning correction again, then I would really sell it and buy it back closer to 800.
We have a question from Shubhashish who's written in. He has 200 shares of Sri Renuka Sugars bought at 40 rupees. He wants to know if he should hold on to it. Now, the stock ended the week at about 18 rupees and 20 paise. We know the government plans to hike import duty on sugar by about 5 to 15%. What's your call on Sri Renuka Sugars? For someone who got in at 40 rupees, should he be holding on to that stock?
It seems like a tall order to really expect Sri Renuka to make that up in a hurry, especially because I think even this import, news that we've been getting is not such a big positive for sugar companies. At least that's what they've been saying. So I think in the light of that, you can really expect the stock to rally maybe to 22, 23 kind of levels, but that's really still not helping the investor much. So I really leave it to him. I mean, 18 is not a great price to exit the stock, so maybe he can wait for the trading pop and exit at about 23, 25 kind of level. But I think that there's no point in really holding on to it, waiting for it to reach 40.
All right, we have a question from Raghunath who's written in 30 shares of Havells India bought at 540 rupees. He wants to know if he should hold on to that stock. The stock ended the week at 767. It's at a 52-week high after Morgan Stanley upgraded it recently. What should he do? Should he be hoping for more, or do you think this is the time to take some profit off the table?
He's bought it at a good price, so from that perspective, if he wants to book profit, it's a different thing. But I think that given the way Havells is placed and the fact that there some of the European subsidiaries, the buyouts, etc., that they've done have now begun to pay out. I mean, that business model as a whole now seems to be kind of taking shape. So from that point of view, I think it's a good stock to hold on to. You've also been hearing that maybe you could see some improvement in margins, etc., going ahead. So it's a decent stock. I think he can hold on to it, but he's bought it at a good price. So if he wants to book profit, that's his call to take. But I would really stay invested.
Alright, so you have got that stock at a good price. It's time for us to take a look at one of our viewers' portfolios. Rajendra is our lucky viewer this week. We're going to take a look at his entire portfolio of shares. He wants to know which of these he should be holding on to. Top of the list, Sharmila, and I'm not surprised, 200 shares of BHEL bought at 357 rupees. What should he be doing with that stock?
I think try and average it. If you see markets coming off again, I think it's a good, start buying maybe even a little at this price and try and average it down because, 300 obviously looks like a very difficult price at this point in time. But since it's a stock that I do like, I think he might do well to average it down a little.
Well, I'm going to take the next two stocks on his list together. He has 100 shares of JP Associates and he has 350 shares of JP Infratech. He's lost nearly half on both of these buys. What should he be doing with this holding right now of both of that stocks, JP Associates and JP Infratech?
See, both are very high beta names. So when you see markets going up, you really see these stocks also zooming. For JP Associates, the possible positive trigger could be the sale of their cement plant, and we've been hearing about that for some time. Management has indicated that maybe by December something on that front could happen. So I think given that my range for JP Associates at this point in time would be between 50 to 65, and then waiting for how this news plays out. So I'd keep an eye on the news for JP Associates. JP Infra will obviously also be impacted, but more so JP Associates. So I think keep an eye out for this news and stay put for the time being.
Alright, last stock on his list, Oberoi Realty, which he bought at 240 rupees. Now, what's your call on the realty sector in general and Oberoi in particular? Do you think this is a stock he should be holding on to?
Hey, real estate as a sector per se, I'm not too comfortable with, largely because a lot of the stocks have corporate governance issues, and there's a lot of opacity in terms of how projects are financed and what is really happening with the sales and what are the realizations, etc. But I think for Oberoi Realty, the outlook is slightly better because I think their model of commercial place, the rentals, the sales, that seems to be working fairly well for them. So among those, the real estate companies, there could be 3 or 4 stocks that I could look at. Some of these are the south-based real estate companies like Sobha Developers. I like Godrej Properties, of course. And I think Oberoi Realty also has had a fairly decent track record. So I think from that perspective, we could continue to hold it.
Alright, unfortunately, we've run out of time on the show. Sharmila, thank you so much for spending time with us this week and answering our questions. If you have a question for Sharmila Joshi, send it to us on the email ID at the bottom of your screen. You can also reach us on our Facebook page. Thanks for watching all of our stuff.